Of course, the World Cup is just one factor that's assisting growth here in South Africa, but there's been a slew of economic data out over the past couple of weeks, both locally and globally, that show the economic recovery is not quite as certain as it was a few months ago. But despite that, the International Monetary Fund this week upgraded its global growth forecast for the year from 4.2% to 4.6%. Earlier, I spoke to Professor Andre Roux from the University of Stellenbosch about growth prospects.
I think you're quite right. The euphoria we had at the turn of the beginning of the year seems to have subsided to some extent. Obviously, the whole European debt story, Greece, Portugal, etc., that has slowed people's expectations down a bit. Having said that, at a global level, economic growth could indeed accelerate. But we have to bear in mind that that's being driven mainly by the almost non-traditional countries like China and India. Europe does seem to be in a bit of a spot of bother. We have this rather interesting situation that the whole government debt exposure in Europe is sort of transplanting the problem a couple of years ago of consumer debt. Now, of course, to reduce that government debt, governments in Europe in particular will either have to lower government spending and or raise taxes. Either one of those is bound to slow down consumer spending. So you're damned if you do and you're damned if you don't. They need to lower the government debt, but the timing of that decision is going to become crucial. So generally speaking, still upbeat about the world economy, but very unbalanced growth. We have the developing world growing quite nicely and vigorously, developed world less so. And even within the developed world, you have America doing all right, Europe less so.
Well, you pointed out we could see growth actually accelerating, and that ties in with what the International Monetary Fund said this week. It's now upgraded its estimate for this year from 4.2 to 4.6%. Yet at the same time, we've had some signs coming out from China, their own PMI numbers very close to that 50 break-even level, and growth not quite as strong as it was at the beginning of the year. So aren't we starting to see the growth starting to lose a bit of momentum in the East as well?
I think the risk is certainly there. You see, the problem is that with Europe slowing down or not growing as rapidly as one would have hoped, and America also still sort of in the doldrums to some extent. It's all very well saying China's churning out lots and lots of goods. They need someone to buy it. And those buyers are mainly in Europe and in America, and if they're not going to buy all of China's production, well, obviously China might see some kind of slowdown. So things are still very precarious. It's very if and but. It's very fragile, this recovery, and I think it's too premature to say we're totally out of the woods at this stage.
How about the impact on South Africa itself? Of course, Europe, a big trading partner for South Africa. We've seen our PMI dip back into negative territory, yet the IMF's still fairly bullish, thinking we're going to see 3.2% growth this year, and that's even better than the Reserve Bank and the government think.
It is. I think that might be pushing it a bit. I think we'd be rather happy to see growth between 2.5% and 3% in the remainder of the year. Of course, we're now in the third quarter. We'll have to see what happens, what the impact on our economy is, obviously, of the World Cup euphoria. But I think we'll be hard pushed to exceed 3% in this country.
What sort of impact do you expect the World Cup to have? There's been varying degrees of how good it could be for South Africa.
Yeah. I think, let's be honest, I mean, the World Cup is a very important economic and psychological booster for the country. But I think the psychological side is more important in the longer term than the short run. Obviously, we all know the story. We're hoping that the World Cup will attract and put South Africa on the map, as it were. And we'll see this euphoria continuing into the months and years and even decades that lie ahead. I don't think we'll see any short-term post-World Cup economic boost, but certainly one would hope in the longer term.
Well, one thing that has picked up in the run-up to the World Cup is productivity, because we had to get everything ready in time for the World Cup. We've had a few wage settlements recently well above inflation, Eskom the most recent. We know that the public sector workers are also looking at above inflation wage forecasts. How do we continue to match those wage forecasts with growing productivity as we have seen in the run-up to the World Cup?
Yeah, well, that is, of course, one of the fundamental problems in this country, looking beyond just the current cycle, and that is, generally speaking, labour is rather expensive. Not wages per se, but the cost of production remains rather expensive. And it's a little bit incongruous that we see a country still in a recession, or just emerging from a recession, and yet these fairly high wage increases. That kind of imbalance is simply not sustainable.
Do you think we could continue to see wage increases of this magnitude? Why are we not managing the expectations of workers? Yeah,
well, I suppose, we're looking at things that go beyond just pure economics. Again, we have this anomaly in this country of 4-point-something million unemployed people. Becomes a very philosophical, political, socio-economic debate. But by rights, in a country with a mass surplus of labor, one shouldn't be seeing these kind of wage increases. Having said that, one has a great deal of sympathy for millions of people earning a wage which is barely a living wage, trying to match that economically and, more importantly, politically and ideologically is one of the big challenges facing the country. Ultimately, when all is said and done, what needs to happen is that labor productivity needs to rise significantly in this country to enable us to be competitive. So you have to bear in mind, in a globalizing world, unskilled labor in this country is competing with in excess of 1 billion unskilled laborers all over the world. That's the reality of globalization. And as long as our unskilled labor is being paid more than their counterparts elsewhere in the world, it'll be difficult to become truly competitive, which in turn is a crucial ingredient for long-term economic and even social success.
Do you think that the unemployment we're seeing at the moment could force the Reserve Bank's hand when it meets in a couple of weeks' time and maybe cut interest rates again? Because that's a speculation following comments from the Reserve Bank Governor Jill Marcus this week.
Yeah, she was very bearish, well, not very bearish, but rather bearish about the economy. You see, when the Reserve Bank makes decisions regarding interest rates, they have to look at a whole host of factors, bearing in mind that the ultimate mandate of the Reserve Bank is to keep a lid on inflation. They have to take into consideration money supply growth, credit growth, which is very low. They have to take into consideration the current and anticipated rate of growth in the economy. They have to take into mind, no doubt, the level of unemployment. Putting it all together, there are many strong arguments for a further cut in interest rates. But reserve banks, by their very nature, are also fairly conservative. They wouldn't want to be premature in doing that. We don't know what the Reserve Bank's expectations are for future inflation a year or two down the road. If they feel that inflation in a year or two might start moving upwards, they'd be more reluctant to lower interest rates. So on balance, I suppose the arguments in favor of a drop are better than 2 or 3 months ago.